Hello and welcome to Business Unmuted, a business discussion broadcast live on LinkedIn and available for download from all the best podcast sites. As ever, Business Unmuted is sponsored by Virtue BMW, which is part of Gateshead-based Virtue Motors PLC. So if you're in the market for a new, used or fleet vehicle, its dealerships are in Stockton, Durham, Sunderland, Malton or York. Joining me down the line today is Rik Hellewell, founder and managing director of Ovenu, the oven cleaning franchisor with more than 120 franchisees in the UK and Australia. And also Aaron Holmes, the CEO and founder of Newcastle-based data reconciliation specialists Kani Payments. It's been an interesting few days with Boris Johnson confirming that restrictions designed to curb COVID are about to be lifted. The UK private business output activity has also expanded at the fastest rate since June, with IHS Markit saying it's risen from an index of 54 to an index of 60 in February. And rising tensions on the Ukraine-Russian border are not only running the risk of major conflict, but they're also causing financial tension, with the price of Brent crude oil nearing $100 a barrel. As we went to this recording, it was 93.48 at 3 o'clock this afternoon. We're live today, but if you watch on recording, that's what it was. Right, let's chat about some of those things and their businesses with Rik Hellewell and Aaron Holmes. Rik, first, you've got the vans all over the country going to repair ovens. I bet the cost of fuel sitting here.
Well, we're actually going there to clean them, Graham, but we can do minor repairs whilst we're there.
Yes,
obviously,
right.
If clients have got a
Clean
replacement seal that needs doing, or a replacement lamp that needs installing, them, we're more than happy to do that whilst we're doing the deepest valet possible. Yeah, life's good. Obviously, the franchisees are kind of back now with the restrictions having lifted on the COVID side of things. And now, of course, they're getting squeezed with extra overheads on massively increasing fuel costs and so forth. Fortunately, however, we allocate relatively sensibly sized territories, so the guys don't necessarily have to bomb round for miles and miles and miles, racking up huge mileage all the time. So
they're trying to get their hypermiling right, do they? They try and get their van usage light on the gas and heavy on the efficiency.
Yeah, something like that. Yeah, something like that. It doesn't always work, but yeah, that's the theory.
And just what is the price of having your regular oven cleaned? What kind of parameters would, if you've got a regular electric oven, you want someone to come in after I don't know, 6 months or so and clean it all out? I've had it done in our ovens. It's very effective. What kind of price are you looking to pay?
It could be as low as starting from £45 for a microwave combi up to £250 for a super duper 2.2 metre long range.
Yeah, okay. And you do Argus as well. That's the good thing. You do Argus.
We do.
You do Argus.
We do.
Okay. So
and other traditional stoves.
So you've got this business going now. It's been a real success. All 120 franchisees around the country. And have the phones been ringing as the COVID curbs have lifted? Have you managed to get back into business?
Yeah, we've been very fortunate, Graham, because we weren't actually penalised under the COVID regime, shall we call it, by virtue of the fact that it was made clear by the powers that be that if we couldn't, or the franchisees couldn't work from home, then they could go to work. So clearly, being a van-based business, we couldn't work from home. We were able to go to work. So it did slow down a little bit, but nothing massively drastic. Have things picked up now? I think yes is the answer, albeit that relatively short-lived. We had a good couple of weeks. I think people's attention now, and it sounds really weird why what's happening in Russia and Ukraine would have anything to do with our particular sector, but I think this is just one of those things at the moment where people's eyes have been taken off the ball and they really are paying attention. So it's gone a little quieter, which will happen for the next week or so. And then we anticipate to be back absolutely full steam ahead, ready for the spring cleaning season. Okay,
and of course it's spring cleaning. Is that a real thing, the spring cleaning season? It's a traditional phrase, spring cleaning, but does it happen?
Absolutely. And it is one of the things that is separated by the north-south divide. It's certainly a lot more traditional and a lot more undertaken in territories north of Birmingham.
Really, that's fascinating. Let's get Aaron on, and let's have you both on the screen at the same time. I think, Aaron, you've got a completely different type of business. This is a real contrast type of business. First of all, you've got different colours: bright blue, bright green. But Kani is a brand new business. Give us a little bit of an insight on what you do. It's quite technical, so keep it relatively simple from my point of view.
Yeah, no problem at all. So we're about 3 years old as a company, and essentially what we're trying to do is help some of the newer banks and financial institutions operate their businesses more efficiently and in a more compliant way. So essentially what we do is we take data that originates from places like MasterCard and Visa, from transaction processing platforms and other sources. So this data is often quite complex. And then we help clients to make sense of it and actually reconcile it. So making sure all the money is where it's supposed to be, and that no errors have been made, basically.
These transaction costs, it is actually very important, isn't it? I was, as a user of Amazon, I was told that I couldn't use Visa a few months ago, and they started to incentivize me to use other card companies. Now that's an argument between Visa and Amazon, but nevertheless it does highlight that the cost of a transaction in fintech is really important in your sector.
It is, absolutely. There was actually some legislation a few years ago that was introduced to try and tackle what was perceived as being the higher fees that card schemes like MasterCard and Visa were implied to be forcing merchants to charge. The reality of that was that we were actually part of an organization at the time called the Electronic Money Association, and there were others that made the argument that actually that these transaction costs were not, if there was legislation introduced, that those transaction costs would not actually be brought down for consumers. And I think when you start to see sort of heavyweights like Visa and Amazon falling out over these fees, it does kind of highlight the importance of the fee level, but generally we haven't seen these savings getting passed on to consumers in the way that we would have liked.
It was interesting. I remember doing what Amazon asked and switching to another card and going through the inconvenience of setting it all up, only for Amazon to give way in the end and some deal to be reached. But I should imagine it hadn't done Visa very, very good at all. Anyway, we're going down a rabbit hole there. It just shows the importance of the kind of work you're doing of making the transaction cost steady and small.
Yeah, absolutely. I mean, essentially, the fees that are charged by financial institutions, particularly the ones that are new to the market, are often kind of dictated by how efficient their own internal operations are. So not just the efficiency of their IT systems, but just generally their entire sort of operational function. So what we're trying to do is make it easier for new market entrants who can challenge and try and bring more competition to the financial sector to launch and scale and succeed with their offering.
Now we've got 2 completely different businesses on our program today. One is a relatively traditional physical-based business, and one is a new tech-based business. Is the current environment hitting you each, even if it might be in a different way? You heard Rik there talking about the uncertainty that the Ukrainian situation is bringing about, the costs that he's having obviously on fuel, maybe not affecting you in the same way. But do you sense that the current business environment, the current economic environment, is going to hit your own business?
I mean, I think for us, we've certainly seen that this is kind of tied into the COVID epidemic as well, COVID pandemic. We found very quickly that we had to adapt to working from home pretty much overnight. But what we found, combination of the current things that are kind of going on in the economy, so the increasing cost of living, but also people being able to work from home and therefore save more money. We're finding that is affecting things like salary inflation. So we know at the minute, we're very mindful of trying to keep a reasonable level for everyone on our team and for their cost of living not to outpace the salary that we can offer in the Northeast. But we do have a big advantage in that as a cloud-based technology company, we can very easily adapt to work from home. So things like rising fuel prices don't really affect us in the same way because the vast majority of our team choose to work from home.
Okay, I'm going to just flip back to Rik on this, but in a moment we'll talk about the environment for fintech in the Northeast, which is a very interesting subject. Let's go back to you, Rik. know that the inflation rate is now above 5%, and you and I are long enough in the tooth to remember it at 26, 27% in the very old days. So 5% doesn't seem that bad, but it is if you've got money in the bank at 0.5%, and it is if your pay rise is 3%, and it is if that's the CPI figure and RPI includes other things that are going up more. And it is a serious issue if you've got a family and your food is going up by more than 5%. In your own business, how are you able to steady the price to the consumers and squeeze the productivity?
It's squeezing the price to the consumer is a very thorny issue. That said, most of our clients do tend to be the more understanding client that appreciate that at the end of the piece, no matter what state the economy's in, the old adage of you get what you pay for is just as prevalent today as it always has been. And if we, or when the franchisees have a nominal price rise to the consumer, they appreciate once a year all of our costs and overheads do increase, and they don't tend to jump ship, which is very, very reassuring. Typically, we've worked for the clients, maybe we've done 1 or 2 deep cleans every year for them for many, many years historically. So they know what they're going to get, and if it's going to cost an extra couple of pounds, then they'll go with the kind of hey-ho attitude, which is great. Obviously, new business, people are starting to just be a little bit more, not necessarily cost conscious, but maybe the dwell period in between deep cleans might extend a little bit. But generally speaking, there is a limit to what the market's going to tolerate, whether it be getting the oven deep cleaned or getting your windows cleaned or your carpets cleaned, whatever it happens to be, getting the car valeted. There will be a pain point that we really just can't exceed. So my job there as a franchisor, very moral and ethical franchisor, which has stood us well over the last 26 years of trading, is to sit down and work through with the guys how they can increase their profitability, albeit by little tiny dear sweet margins, maybe 0.5% here, 1% there, another 0.75% there. Because these savings, and I'm sure Aaron will bear testament to this, these little tiny dear sweet incremental savings will add up over a period. When guys are working through their cash flow and their analyses and their P&L projections, which we gladly do with them on regular Zoom sessions, we can manage to keep things very, very sensible and realistic for the consumer. All right. That said, we're not going to start cutting prices. We're not going to try and join a race to the bottom, because nobody's ever going to win that. We need to maintain the margins, which my own
business is looking at its fees will probably go up by less than inflation, and the way in which it's going to be done is by a measure of both productivity gains, like you've just discussed, and by modest increases, and that's the way in which it probably is going to land. Now, Aaron, as I understand it, you're in the business of helping process payments to the level of £10 billion. So you've got a lot of micro payments. You must have micro charges. How does it work with you when it comes to costs?
Well, we're actually handling the data on behalf of the financial institution. So we're never actually handling the money itself, but what we're doing is helping clients to make sense of the data that comes out. So our clients would typically be a challenger bank or an emerging financial institution. So in our particular case, our direct customer is the bank, and what we're helping them to do is to run things more efficiently.
And when it comes to charges, I should imagine the banks are as sensitive to price increases as any other customer, man in the street for that matter.
Yes, I mean, it's one of the great things about the fintech industry, though, is that the wave of new fintech companies that we've had coming onto the market are competing both on price and on the quality of the products that they're offering to the customer. There's a real revolution going on at the moment in the sort of current account market, and these new market entrants, the likes of Monzo and Starling Bank and Revolut, are really kind of making waves and challenging the existing sort of high street banks. Just in the last 3 years when we've been operating our businesses, we've helped a operating our business, we've helped our clients to reconcile more than $10 billion of payments, and that's going up very, very rapidly indeed.
Fantastic. All right, let's leave it on this thought about the north of England. Now, there was a very important review about the UK fintech sector published recently. It was last year, the Khalifa Review, and it highlighted that Leeds and Manchester had massive clusters of fintech businesses, and that the northeast of England was emerging as a specialist cluster, particularly as where you are in the theme of banking, payments and wealth tech. Now, that report, you are obviously living proof that that is true. This podcast focuses on north of England businesses. Why is it that what is a city that was traditionally regarded as a party city or exporter of coals is now a city which has got such a great reputation in fintech?
No, I think a lot of it comes from the fact that Newcastle has generally a really good technology scene. There are some really kind of innovative and very effective companies based in and around Newcastle. You only have to look at the examples of Sage. I mean, you might sort of suggest that suggesting that Newcastle is somehow an emerging fintech hub when they've actually got Sage based here, a company that was the second biggest technology company in the UK. And involved directly in our sector. So, the Khalifa report was fantastic to see, and I think it's great that it's recognising the actual pedigree that already existed in the region because of companies like Sage and WorldPay and Global Processing Services, these very large and very successful financial services companies that have, as they have grown and got bigger, helped to generate people with the right kind of skills and the right technology backgrounds in the region.
One last question. Is Kani able to defy what has happened in so many northern towns and cities, and that is the brain drain, where talented, particularly young people, leave university or leave the north, in the case of Newcastle and Teesside and Durham, go to university elsewhere and don't come back? Are you able to be a graduate magnet?
I would certainly hope so. I mean, we are very lucky in Newcastle in that we've got, two excellent universities based in the city centre. The Newcastle University Mathematics Department and Computer Science departments work very closely with the National Innovation Centre for Data, which is also based here. So what we're finding is that there are definitely graduates coming through and people with masters and PhDs who have the right kind of skills to work in this industry. And I've sort of done it myself. I'm from the Northeast. I moved down to London to kind of get my career going within fintech, and I came back up to the Northeast because there is the right kind of skill set here. The quality of life that you get here, my personal view is a bit better than you get in London, and it's generally got the right kind of lifestyle and technology and people in this region that can really kind of make a company like ours succeed.
Thank you, Aaron, and thank you very much, Rik. Good to see two businesses in entirely different sectors feeling confident, buoyant and tackling the pressures that we're facing, all of us, in a very optimistic way. Thank you very much. That's it for Business Unmuted for this week. Now, next week, the north of England gets a visit from the HSBC chief economist, and he's conducting some meetings in Teesside and Newcastle, but I'm going to catch him on this programme the day before. So tune in to Business Unmuted next Wednesday live. Thank you.